Hello, all. Welcome to today's session. Today, we are going to talk about education loan as a very uh, powerful tool regarding saving the taxation. Today, with me, we have Mr. Jainesh Sinha, who
Hi.
is from GyanDhan, and he will be walking us through the various aspects of the education loan. And I will be talking about the tax aspect of education loan, which can be attributed for your tax saving and certain implication wherein the loan is remitted outside India for educational purposes and the tax of it. So, Mr. Janesh, please, if you could introduce yourself, that would be
Yeah,
wonderful.
absolutely. Thank you, Saikap. Hi, everyone. Thank you for attending. My name is Janesh Chira, as Saikap mentioned. I'm one of the co-founders at GyanDhan. I'll talk a little bit about who we are and what we do before we move on to the tax aspects and how education loans can really be a very powerful medium for you to take save taxes at the same time fund your or your family members' education abroad. So at Gyandhan, we are India's largest education loan marketplace. We focus more on the overseas end of the education spectrum. However, we do help students with domestic education loan needs as well. So in the past few years, we have helped more than 15,000 students with their education loan needs. And we're currently disbursing more than 3,000 crores in loans every year. We work with all the leading lenders, and our structure is that of a marketplace. So if you come to us, we'll help you find the best possible lender, and not only will we help you identify the best lender, we also take your application, analyze all the documents that you have, submit your application, the full application with all the documents, to one or two or three lenders, the best ones that we've identified, and we work with the lenders to make sure that we get your loan decision in time. So that's our role. And we do all of this for no cost to you. We recover or we get paid by our lending partners, and we charge the students and their parents nothing at all for our services. So, in short, we help you get the best loan in the shortest time at no cost to you. Now, before we talk about the tax aspects of an education loan, first I just wanted to very quickly focus on what is an education loan at a very high level, not going into any sort of depth, but an education loan is a loan that helps you cover 100% of your education and education related expenses. This is one common misconception that we've seen with the students, that they feel that education loan only covers the tuition part of the education expenditure. That is not correct. Education loans help you cover not only the tuition part, but also the living expenses part, any devices that you need to purchase, all of that gets covered. The loan amount can be up to 2 crore rupees. So you can fund the entirety of your education from an education loan. In some cases, the amount can be even higher than 2 crores if you so require. Interest rate that you typically pay is about 10 to 11%. Now, for students with very good academics going to top quality institutes, the interest rate can be lower than 10% also. In fact, the lowest that we have right now is 8.75% as of right now. The loan tenure, which is how long do you have to repay the loan, is up to 15 years. The advantage of having a long tenure to repay the loan is that your minimum repayment requirement or EMI is actually low. That gives you the flexibility to pursue the right career rather than being burdened by the education loan repayment obligation. At the same time, the education loan does not have any prepayment penalty, which is true for all floating rate loans in our country. Being a floating rate loan, most education loans have no prepayment penalty. What that means is you can pay the loan early. So you have the best of both worlds. If you so require, you can pay over 15 years. But if you have extra cash and wish to get rid of the obligation, finish your obligation, you can prepay or repay the loan quickly than you had earlier planned. This is a very quick overview of education loans. Now I'll hand it over to Saket, and he's going to talk about how do you compare self-funding to an education loan where you're thinking about how to finance your or your family members' education, and what benefits do you get from education loan. Education loans are very, very special, and you'll just find that out in the next few minutes as Saket walks you through the next few slides.
Thank you.
Saket,
Thank
over
you,
to you.
Ganesh. So, if we go through the benefits or rather the certain aspect of education loan as compared to self-funding or self-financing, the thing that triggers, I mean, one of the most important thing that gets triggered in our mind that in case we are funding our education ourselves, there is no interest outflow, right? There is no interest outflow. So I need to concern myself with only the principal component, which in any way I have to spend. However, even if we factor in the interest rate, interest component, there are a couple of other benefits which comes attached with the education loan. First and foremost, it builds your credit history. Now, as we know that in today's time in India, CIBIL score has gained a lot of traction before getting you any kind of loan or any sort of financial obligation, even getting a job. That actually requires a CIBIL background checkup. Now, if you are quite regular in repayment of your loan, in that case, it creates a good impression in CIBIL score, right? So again, it will, in case the background checking is happening, good CIBIL score means that your background score, background verification on that aspect is coming to be very good. Secondly, liquidity. Now, if you have taken the loan from a banking institute, in that case, you are not spending your money, you're saving money, right? So you are borrowing the money and repaying. You are borrowing the money and funding your education. That means the money that you are saving, you have saved, that is going to be with you. Furthermore, in case some emergency happening in your family, you can utilize that savings. Instead, you instead of stopping the education or sending out money a little bit too late to educational institute, so your education never gets hampered. So liquidity plays a really really important part in respect of considering both the factors. And finally, it instills a financial prudence. That means, in case you are borrowing the money, you are paying out the money, you are creating a environment for yourself wherein you are taking financial steps to make yourself much more aware of the situation, how you are going ahead with the entire thing. Therefore, education loan can create a really really good impact in respect of your backgrounds checking while getting a job, liquidity, and understanding the finances in a better way. Now, having understood that, or rather having gone through that, let's try to understand what are the tax benefits of education loan. Now, education loan, that benefit of education loan that comes under Section 80E. Now, couple of interesting thing or very good thing about deduction under Section 80E is that there is no cap whatsoever on the amount of interest that you can claim as deduction, right? If you look at the home loan has a deduction limit of 2 lakh rupees for self-occupied house property. Even if it is a let out house property, in that case as well, loss from house property cannot be more than 2 lakh rupees. So in any case, there is no limit or restriction on the quantum of interest deduction you can take for education loan. Secondly, in respect of education loan, you can take the benefit for it for a period up to 8 years, right? Now, this period actually starts from the date, from the year from which you are starting to repay the loan, right? So if you are starting to repay the loan from financial year 22, 23, financial year 22 and 23, in that respect, your first deduction will be claimed in 22, 23, and after claiming that, you will be claiming the benefit for it for 7 further years. or till the loan gets repaid in its entirety. Therefore, education loan has this great impact of giving you benefit over a period of 8 years. Now, as Gyandhan is giving you a benefit of loan for up to 10 years, right? So you can take a very good amount of interest benefit for 8 years. You can settle for a lesser term as well to claim the benefit. So again, this could be a very good situation, a win-win situation if you have taken a education loan and you are claiming it. And this comes into picture when you start a job, right? Most of the education loan starts getting repaid once you start the job, normally after 6 months or 12 months, whatever it may be, right? So once you start the job, you could have a really great corpus in your hand instead of going and investing the money in ATC or any other section which has very lesser amount of yield. You can utilize this amount, the repayment of education loan, as a tax saving tool, and it can give you a greater impact as well. Furthermore, since you are not burdened with investing under ATC, you can instead use that money to create a wealth. You can invest the money into much more high yield giving instrument, right? And it will create your wealth for the future as well. Therefore, if you are taking education loan and you are at the time of its repayment, you can have a double benefit of number one, tax saving through it, and number two, saving the money which you would have invested for ATC purposes and investing in higher yield giving, higher wealth building instruments. Now, education loan that can actually be availed by the parent, obviously, spouse, or any other person who the borrower is a legal guardian, right? So if you are under the impression that the loan needs to be in your name to be claimable for tax purposes, it's not the case. You can borrow the money and claim the money in your tax return, even if it is taken for your spouse's education or your children's education. So this again can play a very, very crucial part in tax planning as well. Now, there are couple of aspects, mostly regulatory aspects. Oh, sorry.
Sorry to put a stop, but just want to add one point on the previous slide before you move on and explain the calculation. So, what we have seen many of our parents do is that they pay the interest while the student is studying. Thereby, they're able to claim tax benefit for the 2 years while the student is studying and also stop any accumulation of interest. Just the principal amount remains. Once the student completes their education and comes out and starts to repay on their own, then they are able to claim the tax benefit. So we have seen that mix and match. Of course, the total number of years in this can only be 8. But most of the students we see are able to repay their loan in about 5 years after they complete their graduation and start working. So with that, they're able to maximize. The parents are able to utilize it for 2 to 4 years while the student is studying, and the student is able to utilize the balance years. The mixed strategy has worked very well for a lot of our customers.
Well, that is a wonderful tax planning, I would say. And if utilized properly, it can create wonders. It can create wealth. It can create tax saving. You name it. And both best parties, both parents and the children, they can claim and they can create their own financial freedom. That is great. Right. So moving ahead. So TCS on education loan. Now, this actually is applicable. TCS on education loan is actually applicable if you are sending out the money outside India, right? Say, for example, your child has gotten admitted to Harvard, right? And for MBA program, maybe. Now you are sending out money outside India for their education as their education fee, right? So in that case, if you are self-financing, the TCS rate is different, wherein if you are borrowing the money and sending out the money through that particular channel, authorized dealer channel, in that case, the rate of TCS is much lower. Now, if you are sending out the money, then the TCS rate is 5%. Now, TCS in this case is tax collected at source. That means it works in a different way, or the completely opposite way how TDS works. Now, at the time of TDS, what happens is whenever you are getting the money, the payer is withholding certain amount of money and giving you the rest. Now, in respect of TCS, you are the person who is giving out the money, and the person to whom you are giving out the money, that person is collecting some amount over and above the amount they are taking. All right, this is called TCS, tax collected at source. Yes, this TCS mechanism works similarly in TDS, similar to TDS. That means at the time of filing your income tax return, you can claim the TCS amount in your tax return to nullify, to reduce your tax liability, ultimate tax liability. However, at the time of sending the money, if it is a self-funding mode, in that case, a higher amount of outflow can be seen, because in case of self-funding, the rate of TCS is 5%, wherein if you are taking the education loan and money is going via that route, the rate of TCS is 0.5%. Now, if you are sending money outside India under liberalized remittance scheme, LRS, right? For education purposes, if the money is more than 7 lakh rupees, in that case, TCS provision gets attracted, right? So obviously, if you are funding MBA studies in Harvard, obviously you would be sending out more than 7 lakh rupees, right? So in that case, what will happen? After 7 lakh rupees, whatever amount you are sending out, on that amount, 5% TCS will be applicable for self-funding. Now, if you are sending out 1 CR, 7 lakh rupees will be first deducted, because on that amount there will not be any TCS. After that, 93 lakh rupees will be remaining. On that amount, 5% TCS rate will be applicable. And finally, your TCS payable for the year will become 4,65,000 rupees. So all in all, you would be spending one CR 4,65,500 rupees. I repeat, 1 crore 4,65,000 rupees. Now, this 4,65,000 rupees, again, that can be claimed at the time of filing the income tax return. There is no problem. But initial pinch will be much greater. Now, if you are taking up education loan, you are sending out the money. Instead of 4,65,000 rupees, you need to pay only 46,500 rupees. So, if you are going through the education loan route, in that case, your ultimate payout would be 1 crore 46,500 rupees. So instead of 1 crore 4,65,000 rupees, your ultimate outflow will be 1 crore 46,500 rupees. So again, that could be a really good benefit. And also, this 46,500 rupees can be claimed at the time of filing the income tax return. Now, Janesh, do you want to add something, or should I move to the other slide?
Just one item.
Sure.
Here we have spoken about 5% TCS, which is applicable on education-related expenses sent out of pocket. There is another level of TCS that we should consider that we have not included in the slide, because it would have been a very confusing picture to present in a setup like this. The next level of TCS applicable is 20%, which is on all other kind of expenses. So if you go abroad, then you're, in addition, the tuition expenses are very easy to classify and evidence as education-related expenses. So there 5% is applicable, plain and simple. But living expenses, which typically run into roughly 20 to 30% of your total expenses. So in a 1 crore example, roughly 20 to 30 lakhs would be living expenses also. On this, 20% is applicable. So the tax outlay that we have shown here is, if anything, an underestimation. The actual total out TCS payable would be actually higher. Just wanted to make that small call out, Saika.
Yeah, that is fine. So Again, we are only focusing for the educational fees, right? In this slide, we are only considering the educational fees. And if the money is going out for living expenses, cost of living, etc., etc., in that case, obviously TCS would be much higher, and that too after this budget.
Correct.
Right. Now, one final thing, that is how self-funding and education loan can uh, give you a benefit, right? A comparative analysis between these two. Once you started your job, once you started your career. Now, in this slide, we have considered that a loan amount is 1 CR, and the package that person has received is 50 lakh rupees per annum, right? Now, in that case, how this situation will play out? Firstly, let's look at the self-funding route, right? So the salary income after all the standard deductions and everything, HRA, home loan, if there are any, everything, it is coming to 50 lakh rupees, right? Or rather, before claiming standard deduction and everything, it is coming to 50 lakh rupees, my bad. So from there, we are going to reduce the standard deduction of 50,000 rupees. We are going to reduce 80C of 1,50,000 rupees. There is no education loan, therefore there is no deduction in respect of education loan. So after reducing all these items, my total taxable income will become 48 lakh rupees. And based on the slab, the tax due would be 13 lakh 2,600 rupees. Obviously, we are considering the tax computation under the old tax regime, because under the new tax regime there is no deductibility of standard deduction or 80C deduction or anything, right? Now, similarly, if we change one factor, that this person has taken an education loan, how the computation changes drastically. So again, the salary income is coming to 50,000 rupees. From there onwards, standard deduction, again, it is same for these both situations. So 50,000 rupees will be deducted. Chapter 6 deduction, that is coming under 80C. For that, 1,50,000 rupees will be deducted, and the rate of interest on the entire education loan for that particular year would be 9,72,000 rupees. So there will be a total deduction of 11.22 lakh rupees from your total income, which will bring down your taxable income to a considerable level, right? And if you see, the tax computed on that particular income becomes around 10 lakh rupees. So you could save around 3 lakh rupees of taxes, which is huge in my opinion. So if you are going for an education loan, most definitely there are three, four benefits, right? Firstly, there is a deduction. Secondly, there is liquidity available in your hand. And finally, TCS compliance. If you are sending out money from your own pocket as compared to sending out money borrowed from a bank, there is a huge amount of reduction in outflow. Again, so these are the tax benefit per se for education loan, which you can surely consider. Now, Janish, would you like to further add on to this?
No, I think you've covered it perfectly. Just illustrates the amount of the strength in the tool as we had postulated at the start of the presentation. An education loan is a very powerful tool when it comes to your tax planning, and which is why a lot of parents as well as students who have cash available or liquid assets available to fund their education out of pocket, they are now choosing education loans as the preferred medium to fund their education, simply because it's just so much better from a tax planning and liquidity perspective.
Right. Now, if we go to the other slide, I think Janish would be the better person to lead you through these following slides.
I talk a little bit about. So let's talk a little bit about education loans in relative in a little bit of detail. We'll not go in a great deal of depth. But at a high level, we spoke about how education loans are typically will cover the entire cost of education. They are not limited to just the tuition part of it. Um, and they will last for as long as 15 years. You can pay them off quickly, but you can take the whole 15-year tenor if you so require, and they cover the full amount up to 2 CR. Now, we want to double click a little bit and talk about a few other relevant details. Education loans are broadly of two types. One, if you are able to provide a collateral, then we classify them as a secured loan. Otherwise, we classify them as unsecured loans. In a secured loan, you'll have to pledge a property or security as a collateral. Here, um, you see the benefits of pledging a collateral is that you actually get a much lower interest rate, and you also get full moratorium, meaning while you are studying there is no payment required. So due to this enormous benefit, we see a lot of parents and students opting for the loan with collateral. Additional benefits are that when you're opting for a loan with collateral, lenders do not consider your co-applicant's income. So, in case your co-applicant is a self-employed individual and their ITR return levels are not at a high level, and but they have a property that they can pledge, in that case, secured loan becomes the preferred choice, because in an unsecured loan, lenders would look at the income of the co-applicant, which might become a challenge if that situation is there. In comparison, unsecured loans are ones without any collateral. Their co-applicant income is mandatory, so lenders would consider co-applicant income in addition to the student's own academic prowess and the quality of the university and program that they have gotten entry into. Okay, there is some repayment mandatory in case of during the study period in case of a loan without collateral. However, this amount is typically not high. We typically see this amount being about 5 to 10,000 rupees per month. Okay, the interest rate is slightly higher depending on your profile. The interest rate would be either anywhere between 1 to 4% higher compared to a loan with collateral in case of an unsecured loan. And this really depends from one person to the other. In this slide, we have tabulated the differences between different types of lenders. So broadly speaking, there are three types of lenders. Banks, which would further be classified into public sector banks and private banks. Then we have non-bank finance companies or NBFCs, and we also have international lenders. We have lenders of all these types available with GyanDhan. In fact, not just any lenders, but the best and the largest lenders of each of these types available with us. We have listed down the relative benefits and disadvantages of each type of lender. We go through all of these benefits and disadvantages before selecting the lender that is best suited to your profile. There's no one size fits all solution. Education loans are inherently very complex. Our role is to simplify that for you. Understanding your profile, we determine which is the best fit lender for you. We make that recommendation and we leave the final decision up to you. Just a very quick review of the broad terms of different types of education loans available. For a secured education loan, the one that you procure with a collateral, the loan amounts, actually the number should have been 2 CR. Loan amounts can go up to 2 CR from 20 lakhs. The interest rate starts from 8.8%. As I said, it's relatively lower, as we'll see from the next slide. Processing fee is typically up to 20,000 rupees. In case of certain exigencies, it might be a bit higher, but in no case have I seen this go more than 40,000 rupees. Loan tenor can be as long as 15 years. As I said, you can always repay the loan quickly, so the interest burden doesn't accumulate. While you study, there is no repayment required. You get up to 6 months after the course period to start repaying your loan. So you have some time before you have to, so that you can find a job and get comfortable and then start the repayment of the loan. We process secure loan applications within 7 to 15 working days after we receive all your documents. The margin money requirement really varies. Margin money, to be clear, is the component of the total cost that you have to pay out of pocket or through a scholarship program. In case of secured loans, it varies between 0 to 15%, depending on, again, the type of course that you're following, the college that you've gotten entry into, the type of collateral that you'll be able to provide, etc. And we're able to provide up to 100% of asset value as the loan amount, meaning that if you require a loan of 1 CR, the lender will require an asset up to 1 CR. Coming to unsecured loans, the ones without collateral, the loan amount is relatively lower. So in case you're planning to fund a high cost course such as a full undergraduate program in one of the US universities, especially the Ivy League universities, where the costs can range up to 1.5 to 2 CR, or a full-time MBA at these colleges, then the preferred loan option would be a secured loan option. Otherwise, your funding component would be much higher. But of course, it's up to your personal financial position and your own preference, which would be your preferred option. The interest rate, as you can see, is at least 1% higher, and it could be even higher depending on your particular profile, including the college and the course that you're targeting. The processing fees is relatively higher as well, 1 to 1.5% of the loan amount. Tenor is slightly longer, but again, we see most of the students prepay or pay the loan early. You get up to 12 months after you finish your course to start repaying, and the processing is faster. So if you're looking for a quicker turnaround, then this is the option to go. Just to explain the process, if you require an education loan, we have a 2-minute application form that once you fill that, we automatically match your profile against our partner lenders criteria. We'll display on screen which is the best fit lender for you, along with the second, third, and the fourth best fit lender. Then you'll speak to one of my education loan counseling team, and they'll discuss your profile in greater detail. And along with your taking your inputs into account, we'll finalize 1 to 2 lenders that your application should be submitted to. We'll then share a customized checklist with you. You will share your documents with us, which can be done through various easy media such as our WhatsApp, our official WhatsApp channel, or through email, or by using our portal. My team then reviews all the documents that you've shared, and if there's any gap or incorrect document, we'll work with you to make sure that the entire document packet is correct and in place. Then we forward your application on your behalf to 2 or 3 lenders that we had finalized with you earlier, and then we take on the onus of following up with the lender to make sure that the loan process moves on in a smooth fashion. We also help, not only do we help get the loan approval faster, but we also help navigate any issues that might come up. Right? So we'll work with the lenders, liaison with the lenders on your behalf to make sure that any questions that they have, we are able to answer them with inputs from you. We also help negotiate the interest rates in case of private loan lenders. Okay, and after the loan is approved, we also help in disbursal of the loan, be it before the visa, which is required in certain countries such as Canada, Germany, in some cases Australia, and or if it is after the visa, if it is direct to the university or a part of it needs to be transferred to your account, all of those complexities are also handled by me. Right, so that brings us to the close of the material that we had. I want to leave you with our contact information, and while we open for questions, just you might want to take our email ID and website link now. Saket, how do we open for questions? I'm not familiar with the technical layout here. If you could help me out. Saket, are you audible? Am I audible? I'm sorry.
Sorry about that. Actually, my microphone, I was on mute. So basically what we do is we go to the YouTube and check for if there are any questions or not. And from there onwards, we can pick up the question. Usually people post their question in the chat box.
Got it.
Right. Please, if you have any question regarding any of the subject matter, please drop a question in the chat box so that we can answer that. All right, I think we have run a very successful webinar because no questions are coming up. Let's just wait for a couple of more minutes, see if there
Sure.
are any questions, then we can conclude the session.
Yeah.
Right. So I don't think there are any question that is coming in our way. So let's just conclude the session. I thank Mr. Janesh for being part of this webinar. Thanks for your time. If you need any education loan or have any queries regarding to that, please visit GyanDhan. And if you have any tax related queries in respect of education loan, please do contact with us. And if you need any assistance in income tax return filing, we are also there to help you out. Thank you. Thank you all for joining with us. Have a great day. And thanks, Janesh.
Thank you.
Thank you.